And we're back. So we've had our introduction into Chapter 8 on master budgets. We'll now begin preparing what's known as a master budget. So you ready? You excited? Let's go. So as I mentioned previously, these components make up what's known as a master budget. We want to take a look at the overall big picture. So keep in mind that there are going to be a total of 10 schedules or 10 smaller budgets that make up what's known as a master budget. So the big picture shows everything to us. It'll show the production, the materials, labor, overhead, sales expenses, cash inflows, cash outflows. We're a big picture thinker, and the budget allows us to see exactly, well, what we expect to take place over our fiscal year. Okay? So when you're preparing the actual budget, again, you're thinking big picture, it will answer certain questions such as how much sales revenue do we expect to earn? The amount of cash collected from our customers. How much material do we need to purchase? What about manufacturing costs? How much cash will you pay to our suppliers, our employees? Cash paid for overhead resources. Total cost will be transferred from finished goods to cost of goods sold. What about their selling and admin expenses for advertising, office salaries, things of that nature? How much money will we have to borrow from or repay to our lenders if needed, including interest? How much operating income are we going to earn this fiscal year? What would our balance sheet look like at the end of the budget picture? So by preparing these different schedules, which are part of the master budget, it allows us to be a big picture thinker and to answer these type of questions about our upcoming fiscal year. Now, this is very important. A master budget is based on various estimates and assumptions. So if we're in 2021 preparing our 2022 budget, we're making a budget based upon estimations and assumptions. Estimations on budgeted unit sales, budgeted selling price per unit, what percent of account receivable will be collected in the current and subsequent periods. So to put things in perspective, this is a budget prepared by business organizations. Keep in mind that when companies sell product to other companies, often they're not going to receive cash at the time of the sale. They're going to collect those funds at a later date. Account receivable represents money that's owed to the business organization. We need to predict the percent of account receivable we're going to collect in month 1, month 2, month 3. And maybe you're saying, well, how do we make these predictional assumptions? Typically, it's based upon prior experience. We'll look at our data from previous years and try to estimate assumptions for the upcoming fiscal year. Okay? Now, the great thing is we have tools that can help us create these budgets, like Excel. Excel is great as preparing the budgets because it has features such as a what if feature. And what this what if feature does, it allows us to say, okay, well, if our sales equal this much, then we'll make this much as a profit. But if sales only equal this much, then you will make the different amount. So what I would recommend, if you have some time, go to Excel under your functions tab. That's the FX function. You have these what if, and you can kind of play around to see what would be the outcome of your budget based upon different scenarios. Okay? So let's get into our first budget, which is the sales budget. We're going to estimate expected sales for the upcoming fiscal year and put that information to a budget. All right. So Royal Company is our sample company preparing budget for the quarter ending June 30th. So of course, there's 4 quarters in a year. The first quarter is January through March. The second quarter we're focused on is going to be April through June. That's the second quarter. So these are budgeted sales for the next 5 months, but for right now, we're focused on the second quarter, which is April, May, and June. All right. These are the number of units we expect to sell in each of those months. And here you see the selling price is going to be $10 per unit. So for our second quarter budget, which consists of the months of April, May, and June, this is the number of sales in terms of units. This is the sales price per unit. We expect to sell a total of 100,000 units at a sales price of $10 per unit. So total budgeted sale for this second quarter is $1 million. So our first budget is our sales budget. And again, for this second quarter, we expect to sell a total of 100,000 units at a cost of $10 per unit. Total sales budget for the second quarter equals $1 million. Now, as I mentioned, we're not going to receive cash up front for all of these sales. So this is our pattern. Typically, we collect 70% of our receivables in the month of the sale, and then the remaining 30% in the month following the sale. Again, this is our pattern. Typically, we collect 70% of the sales in the month the sale took place. So we're saying we're going to collect 70% of April sales in the month of April. The remaining 30% is in the month following the sale. So the remaining 30% we expect to collect in the month of May. Okay? Now, as of March 31st, the account receivable account has a balance of $30,000. That would be the amount of money that is still owed from previous sales. They have not yet been received. That $30,000 will be collected in full in the month of April. So remember that we're not collecting all of our sales for that month in that month. You collect 70% in the month of the sale, the remaining 30% in the month following the sale. So the $30,000 we're gonna receive in April is from our March sales. Okay? And then we'll also collect 70% of our April sales in the month of April. So here's our expected cash collection. So that $30,000 again you see here is the receivables that was owed at the end of March, collected in the month of April. Now recall that in April, we expect our sales to total $200,000. We're going to collect 70% of our April sales in the month of April for a total of $140,000. The other 30% will be collected the month following the sale in the month of May. So let's make sure we got this. So in the month of April, our expected sales total $200,000. Okay? We expect to collect 70% of those sales in the month of April for a total of $140,000. The remaining 30% is collected the month after, which is May, for $60,000. So if you add these two together, this is a total cash collected from our from our April sales, $140,000 collected in the month of April, $60,000 collected in the month of May. The $30,000 was the remaining balance owed from the March sales collected in the month of April. So right now, total $30,000 we expect from the March sales, $140,000 from the April sales, and then a remaining $60,000 collected from the April sales. So as of right now, we're showing a total of $230,000 in part of our cash collection. Okay? Then we go to our May sales. In May, our sales total $500,000 for the month of May. Expected sale for May total $500,000, meaning that 70% of that will be collected in the month of not the month of A, in the month of May for $350,000. The other 30% collected in the month of June for $150,000. So we're showing the expected cash collection so far from our April sales and from our May sales, and the $30,000, that was the remaining balance owed from the March sales collected in the month of April. You still with me? You sure? Okay. Now recall that total sale for the quarter equaled $100,000. $200,000 in the month of April, $500,000 in the month of May, and now we're going to have our June sales. So the question is, what would be the total cash collection for the quarter? So I'm going to go back for a second. You can see what we have so far. And remember that sales in the month of June total $300,000. Now remember that you'll collect 70% of your June sales in the month of June. The remaining 30% will be collected the month after June. Let me caution you, July is in another quarter. Therefore, any money collected in July will not appear on this sales budget. All right? So now I gave it the little hint. Let's see what we have here. The answer is going to be $940,000, which is D, because the June sales will total $300,000. But once again, only 70% of those sales are collected in the month of June. The other 30% or $90,000 will be collected in the month of July. That $90,000 goes to our account receivable account. And again, that $9,000 will be shown on the collection budget for the third quarter, because the July is the beginning month of the third quarter. So for our second quarter, the total cash we expect to collect would equal $940,000. Okay? So if you need to, go back, watch the video slowly to see about the cash collection based upon the sales budget and based upon our pattern. And our pattern was we collect 70% of our sales in the month of the sale. We collect the remaining 30% in the month following the sale. Okay? We're going to come back and look at our next budget, which is our production budget. Because in order to sell those units, we first have to produce those units. Okay? So stay tuned for the next portion of our lesson.